But right now, let's welcome my good friend and co-host, Jeff Small, president of Arbor Financial Services, a retirement income store located in Melbourne, Florida. Jeff is also the Amazon best-selling author of the book, Turning Financial Planning Right Side Up. We also want to bring in Dr. Marc Faber, a good friend of the income generation. Marc is an author and the editor and also publisher of the Gloom, Boom, and Doom report. His newsletter highlights unusual investment opportunities, and it's available on gloomboomdoom.com. Dr. Faber, thanks for joining us today.
It's my pleasure. Thank you for having me on your program.
Oh, you're very welcome. You know, you oftentimes, well, first of all, I got to say something. I usually ask people how COVID is treating them, but looking by the size of that beard, COVID has definitely made some changes in your personal life, has it not?
I've become a hermit.
Exactly.
You see,
we all have.
I can travel within Thailand, but at my age, and especially given that I smoke a lot, COVID is a certain danger. So I prefer to stay home, and I have a very large office, and I have a living house, and I have the dogs and the trees and the birds and everything. So I don't really need to go out a lot. And traveling overseas is not possible. It's in theory possible, but to come back to Thailand is then very difficult because of difficult quarantine requirements, very strict quarantine requirements.
So you become a bearded hermit. Got it. So, you know, you catch a lot of flack sometimes for being excessively bearish or negative about things. But, you know, your prediction, we spoke back in July for second quarter GDP wasn't as bad. You thought the second quarter GDP loss was going to be maybe 15 or 20% maximum. And of course, it was double that. But you also said that, you know, the economy will recover after that and the stock market might keep going up, which has happened. So I want to separate our discussion today into economy and then the stock market. So first, the economy. Economically, what do you see now going into 2021 with the economy that we need to be concerned about?
Well, I think we are at a highly interesting juncture at the present time, and let me explain why. The technology stocks, as you know, are in the sky, the so-called FANG and related stocks. They're very highly valued. And then you have thousands of stocks around the world that have very low valuations. These stocks are resource companies, and they are energy and energy-related companies. They are banks in emerging markets, but also in the US and especially in European markets. And you have material and industrial stocks that are very depressed. And these companies, in theory, and I'm betting that under Yellen as the Treasury Secretary, the deficits will be astronomical. And that at the same time, there will be plenty of money printing, which will lead to a weaker dollar. Already today, the euro against the US dollar has gone up 7% this year alone. Now, I expect the emerging market currencies that were very weak in 2020 to gradually recover in 2021. And the emerging market economies and stocks that have been essentially in a 5-year bear market already, that they will bottom out and start to recover. Because when you think of it, many companies have a tiny market capitalization compared to, say, Apple and Amazon and these type of shares. So when these type of stocks go down, there are two possibilities: that they pull down the entire market. It's possible. That was the case in year 2000 to 2002. But it's also possible that when the Nikkei went down after 1989 by more than 70%, the money flowed from the Nikkei, from Japan, into other countries. And as you know, in the 1990s, US tech stocks went ballistic. So both are possible. and I'm betting that inflation will make a comeback. We've bottomed out in the commodity cycle, in my opinion.
So, Dr.
And I
Faber,
think
let me
that's
ask you this. We have 30 seconds left in the segment. Do you think inflation will
Yes.
make a comeback in 2021, or do you think maybe 2022 and beyond? 30 seconds.
Look, everything depends on how you measure it, even elections, as you know. But I think that commodity prices have bottomed out, and I think that food prices will go up, and that inflation will begin to accelerate.
So even in 2021, we're going to see that. So let's
Yes.
take our commercial break.
Yes.
I know Jeff's chomping at the bit, sitting here waiting to ask you some things, possibly about how the stock market might be affected by the election. Dig a little deeper on where you're going with that. So stay with us. We have more coming up in just a moment.
Sure.
I'm Dave Scranton. I'm here with Jeff Small and Dr. Marc Faber, and we'll be right back. And right now, let's bring back my good friend and co-host, Jeff Small, as well as our guest, Dr. Marc Faber, editor and publisher of the Gloom, Boom, Doom Report. Jeff, you sat around so patiently in the last segment. Why don't you take it away?
So, Dr. Faber, you're over in Asia, and you know what? I've been getting lots of questions from folks who are saying, as investors over here, from our audience and from our listeners, should we have some money in emerging markets like in your space over there in Asia and China? Because China has seemed to have licked the virus or beaten the virus better than anybody. And one of the reasons why they did that, how they beat the virus, is their society has already been extremely restrictive and conditioned for these types of respiratory viruses. They've been dealing with this for a long time. And so their society is much more compliant. But now the outlook economically for China is significantly better than anywhere in the world. Their GDP is outpacing everybody else's. And everybody over here that's an investor is wondering, should we have some money in the Asian markets right now, in emerging markets in that direction, because they seem to be recovering from the virus quicker than anybody else?
I think this is a very good question, but it should be formulated whether an investor must have some money in China and in Asia in general. I came to Asia in 1973, in other words, soon 50 years. And one of the reasons, aside from the beautiful women that live in Asia, was that the economies have so much more potential than Western society's economies. I think that people, when you talk about the coronavirus or COVID-19, I think that because we had the bird flu and so forth, if you tell the population, look, you better be careful. And when you go into a shop or in a restaurant or into a bank or government building, you better wear a mask. It's not necessarily a must, but it's an advice. I think people listen and do it. We don't have democracies to speak of in Asia, but we have a lot of economic freedom. And I think people are quite reasonable when there is a crisis like this. And we know in Asia, we have a lot of high density cities. In other words, you live on small space with lots of people. And so what happened in China when the virus came out of this lab, they controlled everything. I have friends who live in China. They live in apartment buildings or condo buildings. When they went out, someone was checking the temperature here. When they came back from somewhere, back into the building, they were checked again. So the response was disciplined and, let's say, successful in many cases.
Well, and you know what compounds my question as well is that now that we've had, looks like a transition from the Trump White House to the Biden White House, there's an anticipation that trade is going to become friendlier towards China as well. So there's an inertia here from Wall Street on throughout the country that, you know, as investors, we should have some money allocated in the Asian marketplace, specifically China, like you said. So how do you see the Biden administration impacting global trade going forward? Do you think he's going to let down the barriers, or do you think he's going to carry the same Trump torch of protectionist policies and trying to take advantage of, and when China tries to take advantage of the predatory style that they utilize in their trade wars with us?
Well, let me answer this question as follows. You know, Mr. Trump, he was against NAFTA. What has happened, they kind of made a new agreement with the result that in October of this year, the trade surplus of Mexico with the US was the highest ever, And Chinese trade has continued to actually grow. And for China, for many companies, the US is a tiny market. They have markets in Africa, they have markets in Eastern Europe, in the Middle East, in Latin America, and so forth. So the US is no longer the most important market, it's still the largest market, but by region, exports to emerging markets from China are much larger. So I wouldn't invest in China or not in China because of the US. But one thing I want to say, the Chinese market is a huge marketplace, 1.3 billion people. And I think an investor, like at the end of the 19th century, if you were a European investor, you had to have some money in the US because that was the future of the world at the end of the 19th century, beginning of the 20th century. And now the future is really in Asia, not just in China. People seldom talk about India, but India is also more than 1 billion people. And I think that money
Dr.
is
Faber,
actually...
let me switch back because we only have a minute left, and I want to switch back to the U.S. We get it. We need to have some money in Asia. I understand the rationale for sure. But you also said that interest rates with Yellen printing of money is going to be greater. It keep interest rates low, maybe make them lower. Ironically, that actually helps growth stocks like tech stocks more than it does value stocks. So 30 seconds, your best crystal ball. 2021 in the US stock market, it's going to be an up year or a down year? 30 seconds.
I think it will be an up year for oil stocks and for bank stocks and for resource companies in general. I think it will be a down year for the FANG and FANG-related stocks.
Gotcha. In spite of all the printing of money, yeah, they've had a good run. So I can't argue. You might be right. We need to leave it there. Thanks so much, Dr. Faber, for being with us.
Well, thank you very much for having me. And I wish your viewers...
You stay with us too. We have much more coming up in just a moment right here on The Income Generation. We'll be right back.